One of the big pitfalls of being a first-time buyer is that often you don't know what you don't know. So in this episode, I'm sharing my top 4 things that first-timers often overlook. With so much to get to grips with, make sure that you check out our content on our First Home Focused channel with Skipton Building Society. It's like having your very own property expert with you every step of the way. So let's get into it. Well, my first tip is to see what help for first-time buyers is out there. From lifetime ISAs, where the government tops up your deposit savings by 25%, to stamp duty breaks for first-timers. We look at these in more detail in other episodes, but I want to highlight the First Homes England scheme, launched in 2021. These are new build homes that are offered to first-time buyers who are local or key workers or have a low income, at a discount of between 30 and 50%. Properties can't cost more than £250,000 after the discount, or £420,000 if you're in London. When you come to sell, that discount is passed on to the next first-time buyer, meaning homes will always be sold below market value. Alternatively, if you've been a council or housing association tenant for at least 3 years, you could use the Right to Buy scheme to purchase your home at a discount. And the final scheme that I just want to give a mention to is shared ownership. Shared ownership is like a cross between buying and renting. You buy a share of a property from a council or housing association or even a developer, and then you pay rent on the rest of it. In time, as you can afford it, in most cases, you can buy more of the property until you own all of it. And we actually have a whole episode dedicated to shared ownership. So do please check that out if you're interested to learn more. Now, tip number 2 is to get to grips with the mortgage market. You might be surprised at how many options there are out there. And some could be really interesting for you if you're struggling to get onto the ladder. A professional mortgage broker is probably your first port of call. These guys are experts in the mortgage advice field and will be able to look at what's suitable for you personally in your own unique circumstances. One option that could help if you're buying for the first time is buy with a friend or buy with a family member. This kind of arrangement can be flexible. Perhaps you buy 50% of the property or less, and the other person pays for the rest. If you're considering doing this, it's really important that you get some legal advice about how you would both deal with the property going forward, especially if one of you was to wish to sell up later on. Or you could look into an income booster mortgage, also known as a joint borrower sole proprietor mortgage. Is that the answer for you? Those mortgages allow you to add extra people onto a mortgage without making them a legal owner of the property. This could potentially help you get a mortgage that you might not otherwise be able to, because the supporting borrower's income is added onto the application and they share the legal responsibilities for the mortgage payments. What about a family offset mortgage, also known as a parent offset mortgage? This unique mortgage links the savings of a family member directly to your mortgage. Just like a regular offset mortgage, it lowers the amount of the loan that accrues interest. This means you'll pay less interest over time, which can either reduce your monthly payments or shorten the length of your mortgage. Ultimately, it could save you thousands of pounds in interest, so really worth getting your head around those. My next tip is to make sure that you know the difference between freehold and leasehold properties. Freehold means that you own the property and the land that it sits on, so that's typically a house, although some houses are leasehold. This means you're financially responsible for maintaining both the house and the land. Leasehold means you own the property, but only for as long as the lease says. For example, a flat will usually be a leasehold, as the freeholder owns the actual building and also the land that it sits on. Leases can be for as long as 999 years, but many are shorter, and when it runs out, unless you pay to extend it and the freeholder agrees to extend it as well, then the property would go back to the freeholder. Doesn't usually come to that, but that's why many people and lenders steer clear of properties with a short lease. And short lease tends to be anything less than 80 years. Tip number 4 is know your hidden costs. First-time buyers naturally tend to be very focused on mortgages and deposits, but you do need to cover all those other costs associated with buying. To start with, there might be a lender fee to set up your mortgage. This could be anything between £1,000 and £2,000. You might be able to add it to your mortgage balance as well. But you'll also have to pay your lender to value the property, so they can decide if it's worth what you're paying for it. This is generally for the lender's purpose only and doesn't actually check the condition of the building, which is important to make sure there aren't any hidden problems. So you need to think about that. For that, unless you're buying a new build property, you need a condition report, at the very least, I'd say, or a home buyer's report, which is more detailed. Or if you want to be really thorough, then it's a full building survey. Your full building survey could be anything from £400 to £4,000, depending on the size and the age of the property. You're also going to need a solicitor or a conveyancer. They're essential to the whole home buying process, from carrying out the legal checks to organising the contracts and handling funds. So choose one who's experienced in the type of property you're buying and ensure that they have the capacity to take you on at the time and in the speed that you need it dealt with. Delays in the conveyancing process can be deeply frustrating. The conveyancer will act for the buyer and the lender, so the conveyancing firm needs to be on the lender's conveyancing panel. And of course, let's not forget stamp duty. Many first-time buyers are unaware of stamp duty costs before they apply for a mortgage. I've seen it happen so many times. Stamp duty is a government-imposed tax that comes into play whenever you buy a property, and the amount you pay depends on the price of the property. There is a threshold up to which first-time buyers don't pay stamp duty, but it's crucial to factor this into your budget if you believe you'll be buying over the threshold, because it can be a significant expense. And my final unexpected cost is insurance. Many first-time buyers aren't aware that you need building insurance as soon as you exchange contracts, which is the moment that you are then legally committed to buying. So it's on exchange of contracts before completion. Oh, and that's another cost that you shouldn't forget. Removals. On completion day, you're going to need help to shift your stuff into your new home. We have plenty more insider tips for first-time buyers coming up, so do join next time. I hope to see you then. Now, we do recommend you should always speak to a suitably qualified professional, and do please remember, you could lose your home if you don't keep up your mortgage repayments. All the best, and I'll see you next time. Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.